This week, it's time for Security Money. The Security Weekly 25 Index is still trying to recover while the NASDAQ has rallied. In our second segment, we air two pre-recorded interviews from Black Hat 2023. Business Security Weekly starts now.
This is a Security Weekly production for security professionals by security professionals. Please visit securityweekly.com/subscribe to subscribe to all the shows on our network. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly.
According to the 2022 Data Breach Investigations Report, the human remains the number one driver of breaches today, demonstrating that cybersecurity is no longer just a technical challenge, but a human one as well. But how do you manage the human risks of cybersecurity? It starts with measurement. Only by effectively quantifying human risk can organizations engage employees with relevant activities to truly change human behavior. That's human risk management. Map key human behaviors to the business risks that matter most to your organization for free by visiting securityweekly.com/living security. If your organization is ready to embrace edge computing, we have good news. The 2023 AT&T Cybersecurity Insights Report provides everything you need to know to get started. In the report, we identify the common characteristics of edge computing. We found edge use cases are rapidly coming online, and we reveal how to secure edge computing, which is a dynamic, nonlinear, and unconventional approach to computing. Most importantly, you'll learn how to prepare for your edge ecosystem. Get your complimentary copy of the report today by visiting securityweekly.com/ATT cybersecurity. That's securityweekly.com/ATT cybersecurity. Welcome to Business Security Weekly. This is episode number 317, recorded August 21st, 2023. I am your host, Matt Alderman, here in a scorching hot Texas. Joining me remotely today for this podcast, also somebody roasting in the Texas heat, Mr. Ben Carr.
Kind of staying up there. It was a little nice, a little cooler this morning, but just crazy here in Texas. My grass, it just doesn't exist anymore.
Yeah, it's brown, really brown. Also joining us today, filling in for Mr. Jason Albuquerque, is Mr. Tyler Robinson. It's good to have you back, Tyler.
Thanks, Matt. It's been a little too long. Been very, very busy doing other things.
Yes, I know. And thank you for filling in while I was out. You did a fabulous job as always.
Thank you. Appreciate that.
Join our Discord channel to chat with our hosts, ask questions, customize live stream alerts, and more. Visit securityweekly.com/Discord to receive an invite. And I do have Discord open. Let me make sure I'm on the Business Security Weekly podcast. That way, if anybody has questions while we're going through Security Money today, we can answer them for you. All right, now I'm on. Okay. All right, gentlemen, let's dig into Security Money. So as everybody knows, I've been doing this for over 4 years. It's almost 5. And I've been tracking data almost 6 years. So when I came to Security Weekly in 2018, I thought it would be really interesting to create a segment that kind of just summarized the public market for cybersecurity. So we created a Security Weekly 25 index. It's got the 25 top cybersecurity public companies, pure plays in the market. And over the last few quarters, I've had to continue to update the index with new companies because Thoma Bravo keeps buying them. There's other private equity firms too, so it's not all Thoma Bravo. But we've had a lot of IPOs, but we also had a lot of companies go back private. And so every time one of those companies comes out of the public market, I have to update the index. So this quarter, it was Sumo Logic that was acquired, that came out of the public market, and I had to replace it. I chose Fastly. They bought Signal Sciences. They're as close as a pure play as I could get to replace somebody in the index. And they're probably the last of the public companies currently that would fit the criteria for the index. So if another company gets acquired, guys, I think I'm going to have to go to the Security Weekly 24 index.
Yeah, you're starting to pick pretty thin here, and I think with some of the the market shifts, especially with some of the layoffs and or money runways, you're going to start to see a even bigger consolidation, especially for some of those really pure plays where they're trying to build out that portfolio for very specific things to kind of round out what they're already doing. Like the chess pieces are in place. So you may end up going lower than 24, I think.
It's very possible. There are a few of those rumors out there. I mean, the rumors around Rapid7 and a potential sale for Rapid7 has been around for a couple months. You know, they just did a big layoff this quarter, not last quarter, of like 300 people. And we were just saying, you know, their stock rallied. You know, that you lay off 300 people, people are like, yay, the stock goes up.
Yeah, look, it's not just Rapid7 either, right? I mean, there's rumors for a lot of these companies that have been around for a while. Like, I mean, even Rapid7, while they kind of tick up and down. I mean, a lot of these companies, I'm now if the right player comes along. And I think for those companies, the valuations aren't great yet. At the same time, it's a great time to pick them up. So,
yeah, I wonder if those layoffs and or trying to get those numbers to a proper position is kind of gearing up for those acquisitions, or even just the deal and negotiation part of those acquisition plays.
Yeah,
I've heard from some people that. Go ahead, Matt. Sorry.
I was just going to say, you can see some of that in the numbers, and we'll get there in a second. But you can definitely see that there's some you're seeing more losses, Tyler, that I think people are trying to right size to get to profitability to make those numbers look more attractive. Because as I analyze this data, I'm seeing these trends of losses and more losses than recently, right? We were seeing this really good trend towards profitability late last year, even into early this year. But the first half of this year was pretty brutal on profitability.
Yeah, I was going to say that I've heard has indicated, income's down, right? Obviously, and that, we were all kind of sitting there through COVID saying, security spend is still where it has been and it's up and, things are good. But recently, security spend seems to kind of have come down for some of the vendors. And so I think they're trying to trim some of the fat, make sure the balance sheet's looking right, whether that's just to stop the bleed internally and make sure that they can weather it out, or, potentially set themselves up so the numbers are right for, an acquisition.
Yeah, I would agree with you, Ben. So let me get into some of the numbers here a bit. So the index closed on Friday at 1388.53. Now I started the benchmark at 1,000, which means we're up 38.85%. But that's even down from last quarter. So you're seeing, and I posted the graphs in the show notes so people can see kind of the trend. You'll see that the trend this year has been kind of on a decline for the index. But the NASDAQ is actually doing better. So the NASDAQ closed at 13,290.78. It's up about 150 points right now, because when I logged in this morning my index was up like 60 points, which meant the markets were up. So the NASDAQ's up 100.3% in that same time period. So there's a divergence happening between the NASDAQ and the Security Weekly 25 index. And historically, they've tracked pretty closely. Like if you go back, and I've got 4+ years of data in that graph that I posted this morning, you'll see that they track pretty closely. But over this first half of the year, there is a divergence between the NASDAQ and the index, which means the NASDAQ is getting some recovery benefit. I think it's companies like Apple and others on the tech side that are doing really, really well right now, where, Ben, to your point, we're not seeing the same growth rates out of the security market, and the security stocks are lagging behind some of the other NASDAQ stocks.
Yeah, agree. That just mirrors what I'm seeing and what I'm hearing. So I would concur with you 100% there.
Yep. I used to do best performing, worst performing. I didn't do it last quarter, but I brought it back. So some of the best performing stocks last quarter: Splunk, A10 Networks, Tenable, and Crowdstrike. Crowdstrike continued to beat in a very consistent way. They're like one of the best kind of consistent stocks out there, I think, in security. CrowdStrike's done really, really well of beating expectations on a regular basis. Worst performing, Radware, which has been on this list before. Secureworks has taken a huge hit recently. They just also announced layoffs, I think last week, but their stock is way down. I think roughly half of their valuation right now. And then Onespan, which I added to the index a quarter or two back, didn't perform very well this last quarter either. So I don't know if anybody's surprised by any of those, but they seem to be pretty in line with historical results.
I think the CrowdStrike one isn't surprising. They're always doing pretty interesting and good things. They always seem to be making consistent headway. They've got great marketing, great teams doing the research, products that are doing well, sales teams that are doing well. I am curious why they perform so much better than some of the others that have very similar kind of market strategies, but for whatever reason, they always seem to be doing well. It is interesting. I would be curious some thoughts around why the other ones perform so poorly in kind of like Secureworks is a great example, a very hot kind of consolidation to an MSSP market that should, in all intents and purposes, probably be sucking up a bunch of the residual money that's there to kind of fill in the gaps that are being added by the layoffs and stuff. So I am curious what you guys think around that.
I was going to give Ben a second if he wanted to chime in there. I have some thoughts.
No, I didn't have anything right then, Matt, but go ahead.
So Secureworks did a very interesting strategic shift where they started to focus more on the product and the platform than they did on the managed services side of the business. Now it was a plan, right? And so Tyler, to your point, even though we're seeing these layoffs, if you're defocusing your managed services part of the business because you want to be the technology platform for other MSSPs, maybe they're not reaping the benefits of some of those layoffs because maybe some of the MSSPs aren't using their platform to pick that up. But that was a kind of a strategic move by Secureworks. Initially viewed very positively to turn them more into a product company, but the results on the other side have not been positive.
Yeah, that's very interesting. That's one of those gambles that just didn't pay off. A few too many cooks in the kitchen.
Maybe. It's just interesting. And then I look at somebody like a SentinelOne, very similar to CrowdStrike, right? SentinelOne came out with a very strong IPO. They've done very, very well competing with CrowdStrike, but maybe just some inflated expectations that they didn't quite meet, where somehow CrowdStrike's able to always be in line or somehow beat out expectations. But I mean, their revenue it's crazy. Like how much revenue they do compared to kind of their competition and others in the market is, I mean, it's a lot of money, and they keep growing on top of that money base.
Yeah, but I wonder if they actually keep growing with that because they seem to be kind of stretching for where they're going to expand further. I think that's my concern there.
I think it's everybody's, Ben, which is maybe why expectations are down and somehow they just continue to figure out how to squeak it out. But they've acquired some very interesting companies that they've embedded into the platform, which gives them the ability to cross-sell and upsell. It's the Qualys strategy too, Ben, as you know, right? I mean, Qualys's earnings, they continue to grow, right? They just do. And I think it's leveraging the base to cross-sell and upsell.
Yeah, I mean, that's been the market for a long time, right? It's how do you become that more than one trick pony? How do you kind of expand your base to gather more of the security market share? And I think that, like it goes back to my days when it was Network Associates, right? And it was outside of just security. It was help desk. It was network general, right? It was security. It was the AV market. Now you're seeing, I think, the security market's big enough for these players to try to figure out, okay, how do I land and expand wider in the security? But on the CISO side, we're looking at how to consolidate. How do we get less vendors? How do we get more utility for our dollar? But at the same time, like we can't. I think budgets in a lot of enterprise companies are they're kind of, I wouldn't say constrained yet, but they're certainly concerned about when they might get constrained. And so as a result, it's where do I spend the dollars the best? And it's not just peanut buttering cash around into a million different vendors and a million different products to try to see if something works. It's really focusing on those technologies that people know are going to make a difference, in their risk bottom line.
Yep. And this is where the platform vendors, I think, are benefiting from this, in that you're seeing very strategic acquisitions. Palo Alto's been doing it. CrowdStrike, obviously. Checkpoint made a big announcement last week with purchasing Perimeter 81. They continue to buy. Like, it's putting them in positions for this consolidation play. And this consolidation play is real. It is very real. Like, we see that with those pressures in the business today at Living Security and other places. I talk to peers. Like, it is real. And so these platform players are picking up really interesting assets to continue to consolidate around a set of solutions, Ben. And I think that benefits the CISO who's trying to reduce the number of vendors they work with.
Yeah, it's been something that, when I talk to college, when I talk to peers, it's something we struggle with a lot of time is, we don't want something where we're putting a lot of time and effort into it. And especially, if you think of the sunk cost of the assets that we're deploying internally, whether it's, systems, hardware, functionality, integrations, or it's actually, talent, we're hiring people, and the more applications or systems that you have to deploy against, it's really expensive from the talent side. And so if I can get one application that's going, or one tool that's going to have a cross technology space, and for me as a CISO, so I'm more likely to spend money there. And that's where I think, you rightly said, platform plays are going to be where it's at. And so if you can expand your business by doing really smart acquisitions in these down rounds right now, it makes total sense.
Yeah. All right, let's round out the public side. No IPOs last quarter, not a surprise. No acquisitions out of the public market, which means Thoma Bravo's cooled off for now. The only public layoff was Akamai. They did about 3% of their staff, which is about 300 people. So again, nothing crazy last quarter. Just the Rapid7 and Secureworks announcements in the last 2 weeks are more than happened in the entire second quarter. So I thought we were about done with layoffs, but this quarter's ticked a couple back up. And I think one of the key highlights is IronNet. There was rumors that it was going to go private. Somebody was trying to buy them out. It looks like they're probably just going to get delisted off the NASDAQ, is the latest news I saw that came out about a month ago. So I think, Siren's assets, it's down below. Siren got liquidated for $3.5 million. Okay. Stock collapsed. They sold off the assets. They were valued at $3.5 million. Somebody bought them. It's listed down in the private section. IronNet getting delisted is probably heading down a very similar liquidation path, even though it looked like somebody was going to try to take them private, but I don't think that worked out. All right, let's dig into the private side. So still funding coming in. There's still some good raises here. Now, the numbers are definitely smaller. There's fewer of them. I don't report on anything under 20 million. There's a lot of small deals happening, and there's a lot more smaller deals happening right now. You're seeing a lot more down in the $6, $7, $8 million range, which 2 years ago was just, you couldn't track them. You just couldn't, because everything was so big. Blackpoint Cyber takes $190 million in. That's the biggest raise in the quarter, which is not a huge number. I mean, we've seen 400 million plus numbers in the past, right? In this case, CyberReason's $100 million raise was a huge down round. It took them from unicorn status. They cut their value by 90% when they took that $100 million. But I think they needed it to survive. Like, that's a huge down round.
Yeah, and that's, I think that there is money out there that people are looking to put into the market, but they're expecting to come into better valuations as a result of this. Better valuations for the investor, not for the companies, right?
Yep.
Yeah, it's just, it's to be expected given the state of the industry and what we're seeing right now. So it's unfortunate for people that, expected that the growth there, but I think you're right. I've been making it to the
Let's see, a couple other ones that are interesting here. Huntress took in $60 million, which is a good raise for them. We know some of the Huntress folks. We've tracked them for a while. Safe Security took $50 million. They also acquired RiskLens this quarter, so I'll cover that next quarter. But they took part of that $50 million and already made some moves with it by buying Jack Jones's company RiskLens, which is kind of the incorporation of the FAIR model into the Safe Security stack. That was an interesting raise and then quick acquisition after that. Let's see, what else? Acquisition-wise, there's some interesting ones on here. So Archer gets sold again. So, I worked at Archer. I worked at Archer for 2.5 years. So it was part of RSA. When it went to EMC Dell, it got spun out to STG. STG spun it out again, I think, on its own from the RSA portfolio. Now, Cinven purchased it. So, yeah, Archer's gone through some really interesting transitions over the past couple of years.
Yeah,
Is that part?
I don't even know.
Yeah, is that part of their strategy long term, or is that just part of how it's played out because of decisions made?
Yeah, I mean, this whole thing, RSA was building a very interesting platform. It's a little history for everybody. I got there right after the NetWitness acquisition to really work on the Archer side of the platform. And it was pretty clear that NetWitness was kind of where the investment was going to go. After a couple of years, I kind of realized, what Amit was doing there at the time was to build out the Advanced Security Operations Center. They were also building out a pretty big identity portfolio, right? Fast forward, Dell buys EMC, figures out that they want to get rid of the RSA assets. They kind of spin that out to STG, right? STG tries to figure out what they want to do with the platform. They spin NetWitness and Archer kind of back out as separate companies. The RSA portfolio focuses on all the identity fraud work that it had there. And then, again, Archer gets kind of sold off. So I think it's weird because it's just where Archer fit into in the overall kind of strategy of RSA, Tyler. And it's still a pretty big business, or it was. I don't know where the revenues are today, but it was a pretty good sizable chunk of revenue for RSA, but they decided to kind of put it out on its own. So how well will it survive on its own? Because it benefited greatly from the RSA acquisition. Like RSA walked it into every strategic account and upsold every account on Archer back in the day. I don't know how they're doing now as a standalone.
Yeah, but you're just not really seeing them, right? And I think part of the when you look at a platform play, people are looking at things like the ServiceNow, right, and trying to figure out, well, is that the way I go? Transparently, I that, right? Went together and look at.
Well, what's funny is the ServiceNow capabilities were built by a bunch of former Archer guys.
No surprise. Yeah. But they just didn't continue the investment there, I think, right? And so that's why I think you didn't see Archer continue the way it had. It had a great potential, but I think we're not seeing that at this point. So hopefully they can spin that around.
Yep, agreed. Let's see, a couple other ones. Looking Glass by ZeroFox at a super small valuation. Like it was well under how much money Looking Glass had brought in. So that was definitely kind of an asset sale. I think ZeroFox picked up some interesting assets as part of that acquisition. Like I said, the Siren assets were bought by Data 443. They were valued at $3.5 million. This is a formerly public company. Let's see, there was a couple other ones in here. Oh yeah, the Armor Blocks acquisition by Cisco. I was an advisor into Armor Blocks, so I don't think that was a huge. I don't think that one was very big. The biggest one actually was the Absolute Software by Crosspoint Capital Partners. Now, Crosspoint, I'm pretty sure, is the one that bought RSA Conference too. That's Hugh Thompson and Greg from Symantec. I think that's their company. So that was valued at $870 million. Yeah.
Yeah, Crosspoint's got a lot of really good portfolios over there with Reversing Labs and RSA. They've got quite a plethora of really good companies.
Yeah. So when those guys, when after the Broadcom acquisition by Symantec, they created Crosspoint Capital Partners. So the CEO, what's Greg's last name? I'm drawing a blank. And Hugh Thompson, they're the primaries on that. So they've been buying up some really interesting assets. And I mean, this is a good valuation for a private sale. Like you're not seeing a lot of public like facing numbers because there isn't a lot of positive news. So when you see it, you're like, oh, that was a good valuation. They're still out there. Few and far between. Let's see. Couple layoffs on the private side. Expel about 10% of their workforce. That was 10%. About 60 people. Dragos laid off about 50 people. That's about 9% of their employee workforce. Those are the only two I saw on the private side that stuck out. I did go through.
That's kind of interesting because they seem to have been scaling up on work and having to downside. I wonder if that was because of the rapid expansion.
Maybe. Very possible, right? I think Dragos has some really interesting technology, but they also have, I think, there's a big service component to it as well, Tyler. So maybe it's just too much of the services headcount. Maybe, I don't know. Let's see what else is in here. Oh, Yubico and ACQ Burr were going to merge, and then I think go public. I didn't follow the rest of the storyline to see if they had actually done that, but I did not see a new public company around Yubico come out. So I think there was a planned merger and go into the public market. I don't know how this ended. So I'd have to ask Paul. Isn't he a Yubico guy or something like that? He likes the YubiKeys. All right, gentlemen. Anything else in here that stuck out to you that you guys wanted to cover?
No, it'll be really interesting to see what happens in another 3 months.
break out the crystal ball. I'd be curious to know where this market's playing out.
Let's see. Next time we do this will be in Q4 on Q3 results. It's the summer months. It's usually a little slower. Lots of vacations. I don't expect the index to be maybe much higher, maybe in line with where we are today. We'll see. I think a lot of it will depend on what the Fed does with interest rates, right? I don't think we're done with interest rate hikes. Even a 0.2% increase in inflation means we're still going in the wrong direction. We have not flatlined, and we're not decreasing yet, which means that tells me the Fed's going to continue to look at this pretty closely and decide what happens with interest rates. If we see another interest rate hike, we could see another minor correction in the market, which would take all these indices down a bit to turn around to rebuild. So my guess is we're pretty flat over the next quarter, but we'll see. My prediction.
I hope that's the case.
I would agree.
Yep.
Flat is better than down.
That is true, Ben. That is so true. But I think we are starting to see an uptick in certain areas. The question is, will the whole market see that same uptick, or do we just kind of flatten out? But we'll see. We'll see next month or next quarter when we do this again. Gentlemen, thank you so much for joining me today. It's always a pleasure. Thank you, everyone, for watching and listening. Stay tuned. We're going to take a quick break and then air 2 pre-recorded interviews from Black Hat.